Good evening, traders. Welcome back to the channel. This is Vishal, and you're watching Nifty and Banknifty short-term view. Well, in the morning, we did see that markets did open a gap up, and after seeing yesterday's sell-off, because yesterday was a pretty big red candle. If you compare this in the last few days, this one was the biggest. Second, obviously, after the 20th December candle. But it seemed that even today, markets could open gap down, but when they opened gap up and they formed sort of a big hammer in the hourly time frame charts, it surprised me. Although the importance of this hammer was not a lot, because where it was exactly formed, it was not important. And after that, market continued to move higher. It made an intraday high of probably around 21,700 plus. And after that, I started seeing some, selling in out of the money calls in banking, and then Bank Nifty started collapsing. So this was a pretty surprise. And if you check all the sectoral indices, then majorly the one which has been responsible to drag Nifty lower is obviously Bank Nifty. And within this Bank Nifty, I should say that the private banking were more responsible. Now, looking at Nifty first, what we can see is obviously over here we had a higher high in price. This was a slightly lower high, but the RSI was moving lower. RSI was making a lower high. So it was a negative divergence. And if you have a look, this is not a crash. This is certainly not a crash where this market corrects or the stock corrects. This is more of a consolidation. This is more of a consolidation. You can see this is sideways range where making money is going to be very, very difficult. Even in my previous video of Sunday, the weekly sectoral analysis, I just shared the exactly same thing, that making money is not going to be easy for the traders in next few days or weeks. And even if you have a look in the hourly time frame charts, especially within this 3 to 4 days, it has been really pathetic. Even if you have a look, if you have been using RSI a lot, then you will understand that this is not a trendy market. Yes, as a day trader, you will get opportunities a lot. You will be able to make money. But apart from that, it's not going to be easy. Now, talking of levels, if I just go to a 15-minute chart, then you will see that we do have a positive divergence in RSI with a lower low in price, and while closing we had a hammer. So it could be possible that if we do not open gap down, or if we do not break possibly this low of 21,493 in the first couple of hours tomorrow, then we might see a small pullback, not a very large pullback or something, but just a very small pullback. And after that, I guess it will decide what is going to be the trend of the day. And if we break 21,490, which is an important support, short-term support, then maybe lower levels will be visible in the market. But again, as I'm saying, it's not going to be easy to make money. So be very, very careful if you're taking positions overnight. Okay, because you saw over here on this day, on 3rd of Jan, we collapsed. Then suddenly we had a gap up. Then again we have a green day, not a lot of very big green day, but still we closed in green. Suddenly a big red candle yesterday. After seeing yesterday's candle, it was quite pretty much visible that markets will come down. But then again, we had a surprise gap up, and then again, we have a sell-off. It's completely zigzag move in markets, not a very good time for traders. Now, considering Bank Nifty, if you can see, even in Bank Nifty, we do have a lower high in RSI, a higher high in price. So as I was clearly saying, that the momentum on the upside is waning. See, trend is a different thing and momentum is a different thing. If you want the trend to continue, the momentum is also important. Okay, not every time the negative divergences or the waning momentum is going to work, but yes, this time it did work. Now, again, if you check the hourly time frame charts, if you check the RSI, you will understand that this is not a very good time to trade. And if you have a look in the 15-minute chart, again, we do have a sign in the extreme short term, that the downside momentum in the banking pack is waning. If at all we have a pullback, first of all, today's low should not be taken out tomorrow immediately, at least in the first couple of hours. then maybe just a small pullback can be visible. And after that pullback, if again we see a sell-off, then you have to be careful that today's low should not be broken. If this low is broken, then maybe lower levels will be visible. But again, you have to be very, very careful that do not have overexposure in your trades, because since market is choppy, it's not going to be a smooth ride for traders. And just while I was looking at the stocks, it was not just the banking pack. There were other stocks like Reliance, although it did not correct more than 0.5% or 1%, but it still closed in red. Then obviously the king of the PSU banking stock, which was SBI, it's still coming down from this particular high of 652. Today it's at 625.40. The king of private banking pack, the main responsible stock, because if you have a look at the weekly time frame chart, it was clearly visible that it was overstretched. It needed some cool off. And I guess it's good that the stock is coming down right now, and we'll have to see, wait and watch where does this correction stop. Then if we come down and if we have a look at TCS, you will say that the TCS has closed in green. That's fine, but it did made an intraday high of somewhere around 3752. So from that intraday high, TCS has also come down. Even if you have a look at Infosys, yes, it might have closed in red, but again, Infosys also came down from its intraday highs. So it's not just the banking pack, but it was a little bit broad-based selling in few of the large caps. Even ITC managed to close in the red territory, right? So again, coming back to the main indices, Nifty, Bank Nifty, my trading plan will be to trade as less as possible for the next few trading sessions, until and unless some clear visible direction is not seen on the charts. And whatever open positions you have, which you have initiated at lower levels, maybe as a positional trader, maybe as a swing trader, I would like to manage those open trades rather than initiating few new trades. Yes, I do have few stocks in my mind, which I've also shared in my weekly sectoral analysis. You can surely watch that video, my previous video to this one. But if overall market is not going to show signs of trendiness, then initiating trades could be a little bit more dangerous, because we are also coming up with the result season, and maybe in the next month we could have the budget also. So trade less, stay safe, initiate trades only if you feel they are high probable, and it could be advisable that deploying lesser leverage or lesser exposure to your trades is a wise thing right now. Okay, so take care guys and stay safe.